Hey there! Today, we're going to dive into the current situation with the Federal Reserve and explore the implications of their decisions on the market and Bitcoin. Strap in, because we're about to cover some interesting ground. As you may know, the Fed has been hiking interest rates with the expectation that they'll stop when they reach a critical point. Many believe this terminal rate will be around 5%. With the federal funds interest rate currently between 4.5 and 4.75%, there's a 77% chance of another 25 basis point hike. But what's more fascinating is the market's predictions beyond that. Interestingly, the market anticipates the Fed will cut rates as early as June, which contradicts Jerome Powell's statements. So why is the market skeptical? It's due to the recent incidents involving banks and the Fed's intervention to prevent a banking crisis.
The data from January on employment, consumer spending, manufacturing production, and inflation have partly reversed the softening trends that we'd seen in the data just a month ago. Some of this reversal likely reflects the unseasonably warm weather in January in much of the country. Still, the breadth of the reversal, along with revisions to the previous quarter, suggests that inflationary pressures are running higher than expected at the time of our previous FOMC meeting. From a broader perspective, inflation has moderated somewhat since the middle of last year, but remains well above the FOMC's longer-run objective of 2%. The 12-month change in total PCE inflation has slowed from its peak of 7% in June to 5.4% in January, as energy prices have declined and supply chain bottlenecks have eased. Over the past 12 months, core PCE inflation, which excludes the volatile food and energy prices, was 4.7%. As supply chain bottlenecks have eased and tighter policy has restrained demand, inflation in the core goods sector has fallen. And while housing services inflation remains too high, the flattening out in rents evident in recently signed leases points to a deceleration in this component of inflation over the year ahead.
Now imagine if Powell announces an extension of the rate hikes. This could lead to some significant consequences, as the market would need to adjust its expectations once again. But let's focus on what's most likely to happen. A 25 basis point hike with a hawkish tone.
Next week are going to be important weeks for getting some sense of where is this data, what is the data telling us.
I'm worried about the other side. People saying, what are you doing about inflation that is too high and that continues to surprise to the upside?
I think the Fed's probably going to opt for more 25 basis point hikes, probably 3 more, maybe even greater than that. Maybe we'll get to something close to 6%. It's not really clear.
I think the central banks want to slow down the pace of hiking, which is going to bring down market volatility.
The Fed has slowed down considerably. Credit markets stay healthy. The consumer continues to spend, and wages continue staying strong. This is not the signs of a typical bear market.
Why are equities up with this spike?
As for Bitcoin, it's essential to look at how rate hikes have impacted its price historically. In the previous cycle, Bitcoin's value increased when the Fed reached the terminal rate, but dropped when rate cuts were introduced. This time around, Bitcoin's behavior might be different, with its recent low in November as an example. The Fed's actions could cause Bitcoin to rise and fall at different times throughout the rate hiking cycle. Eventually, when the Fed cuts rates, Bitcoin is likely to come down again. However, once we enter a new phase of quantitative easing and lowered interest rates, potentially by 2024, the stage will be set for a new Bitcoin bull market. As for how to prepare, It's important to remember that while the current uptrend may be exciting, we could see Bitcoin's value drop again later this year. This downturn might resemble previous market scares, but it'll likely be a temporary setback before the next halving and quantitative easing period. The recent issues with banks serve as another reason to be optimistic about Bitcoin in the long run. As Bitcoin's dominance increases, it's possible that liquidity from the altcoin market is shifting to support it. However, when this liquidity dries up, we could see a temporary dip in Bitcoin's value, setting the stage for a 2024 rally. Of course, if the Fed starts printing money again, that could be a game changer, potentially turning the bearish outlook into a bullish one. So, stay tuned for more updates and make sure to subscribe for our next video where we'll discuss Ben Cohen's top 3 altcoin picks and explore the future of Bitcoin dominance. Thanks for watching and see you in the next video.